Let's go to the first one. Debts and obligations to a business are referred to as. Oh, I'm sorry. Was the practice exam sent in an email? Yes.
Is this something that we're gonna have to turn in?
Yes. Yep.
Okay.
So today I'm going to put. We'll have the drop for the handout, the practice exam that we're doing, and then also the exam which I'll send out after class. And those will all be due next week. They'll be due a week from today. I'll say 26, so they'll be due on the 2nd of February.
Just the practice, the real exam, not the practice one, right?
There's everything for this chapter.
Oh, okay.
Yeah, so the chapter one, yeah. I'll put it in the text here. Due on Tuesday. Second. Oops. Oopsie daisy. Let's try that again. Yeah, so anyway, we do that, and you won't your grade to date. It won't show anything of your grade to date until next Tuesday. So if you turned all the stuff in early, you might get a grade from me on it, but it won't be in your grade to date until next Tuesday. And that's just a quirk of Blackboard. It's either that or show the whole class is flunking. Which then people email me, how come I'm flunking the class? You're not. All right. Okay, so yeah, so and again, as we go through here, I think there's 10 multiple choice. So I mean, you can definitely do this on just and just put your answer in whatever it is, for each of those. And then we're going to do the financial statement. You can do that on regular paper too. I am trying to kind of convert my handouts so that they're more fill-in friendly. This one is not, but I am trying to convert them to do that so that you putting more tables in that you can fill in them with the spots on them rather than inserting everything as a picture. Okay, so let's go through these. Debts and obligation of a business are referred to as.
Do we just say like the answer to you?
Yeah. What is it?
Okay. C, liabilities.
Yep. I know. I'll highlight them so that Okay. Good. Which the following is an asset?
Investments.
Yep. Yeah, investments we didn't really talk about that. That's when you take cash and put it into something rather than having anything on cash. But also, if you look at the rest of these, mortgage payable is a liability. Common stock is an equity. Retained earnings is an equity. Yeah, so even if you didn't know that that one was the asset, you kind of know based on these other ones that it can't be any of those. All right. Which of the following is not a liability? We didn't talk about this first one. This first one, unearned revenue, service revenue, is a liability. And we should talk about that. So unearned revenue is when someone pays you ahead of time for something, but you haven't done the work. So, for instance, my neighbor says, I'm going to mow his lawn for $20. So I'm going to mow my neighbor's lawn for $20. My neighbor pays me ahead of time. We call that an unearned revenue. I haven't mowed his lawn yet, but he's already paid me. So I have the cash, but I haven't mowed the lawn. Now, if I don't mow the person's lawn, I can give him the $20 back. So that's why it's a liability. So unearned revenue is when you get paid in advance for something you haven't done yet. And if you don't do the work, then you have to pay them their money back. So it ends up being a liability. Now, usually you'll end up doing the work, you'll mow the lawn or whatever, be done with it. You'll be a regular revenue at that point. But until you do the work, it's a liability. So unearned, back to here, unearned service revenue, this is a liability. Yeah, it's when you've been paid in advance. So we're looking at the rest of these here, and it's kind of like Sesame Street. One of these don't belong here. And payables are liabilities. Receivable is an asset. So this one's going to be, so this is a liability. An asset. So yeah, it's going to be see. But yeah, the unearned revenue is when someone pays you ahead of time. It's sort of like it's sort of the opposite of accounts receivable. Unearned revenue is the opposite. Accounts receivable is you've done the work and they haven't paid you yet. Unearned revenue is just the opposite. They've paid you, you haven't done the work. So it's kind of a timing. Both of those are kind of timing things. Okay. Still looks blurry. Number 4. Ending retained earnings for a period is equal to beginning. Which one?
C.
Yep. Yeah, we take our beginning retained earnings, we add income. That's owners making money. And then subtract dividends, this is owners taking money out of the business. Dividends are reported on
E.
Yep. All right. This one down here looks like we're going to need a little ciphering. Okay. Housing company begins the year with retained earnings of $330. Let's write that down. Okay. Recurring revenues, expenses, and paid dividends. Okay, so remember statement of retained earnings, beginning retained earnings plus net income minus dividends will give us our ending retained earnings. Okay. Well, he tells us the dividends were 40,000. Now, net income. They didn't tell us what it is. So what do we do? How are we going to find the net income?
Do we subtract the expenses from the recorded revenues?
Yep. We're going to make a little income statement over here. We have revenues. 500,000. So this is money coming in. So 500,000 came in. Expenses went out. Line underneath. So 500,000. Or 10. Oops. All right, so this is our answer. And the okay. So then we had a little bit of a jump through a hoop. Get to that one. All right. Number 7 is basically just the income statement. Because you know, what are they asking for? They're asking for the net income for the year. Revenues minus expenses. What is that, 50,000? Yep. Yeah, and the common stock is let's see what I'm doing here. Common stock is in the equity section on the income statement. And the dividends are on the statement of retained earnings. Oh, so this is on the balance sheet in the equity section. And dividends are on the statement of retained earnings. Good place to put it here. Retained earnings. So anyway, that's it. So you know, make sure you look at what they're asking for. Okay. Oh, 8 is actually kind of an interesting one, at least to me. And that is well, I'll let you guys figure out. So how would we figure out the beginning equity?
Since stockholders' equity and liabilities have to be the same as assets at the very beginning, the stockholders' equity would be 140 minus 80.
Yep, that's it. Yeah, so if we have S, I'll do it over. So we have assets. 140,000. This is the beginning of the year. We have liabilities. 140,000. No, we don't. Hold on. Hey, where's my? Liabilities were not 140,000. Liabilities were 80,000. And so the question is, what would be the equity? And you know, we know that these two sides have to equal. So 140,000 equals 80 plus whatever the equity is. So if you subtract the liability, so 60,000 must have been the beginning equity. So these are second equal, and you'll notice when you add those two up, they'll balance. Okay, so the real number we're looking at for there though is this number. So this is our beginning equity. Over here, because I think I might run out of room. Okay, during the year, they recorded revenues of 220, 110 of expenses, and dividends of 40,000. Stockholders' equity at the end of the year was. Now, the only thing that's going to change, they don't tell us if they sold any stock or anything like that. So the only thing that's going to change is the retained earnings account. We don't know what the beginning retained earnings is. But we do know that whatever the retained earnings is, it will increase with net income and decrease with the dividends. So we know there's going to be a change in retained earnings. It's going to look like this. Okay, so forget what the income is, minus the dividends, and that'll tell us our change in it. Okay, well, I'm running out of space. We're going to have revenues of 220. Minus our expenses of 110. Equals our net income. I think that's 110. That's a bad number. It's a bad number because, as humans, we always try to assign, some larger to it. So the net income is going to be the same as the expenses, which is an unhappy coincidence. And, these two are virtually never the same, but in this case, they're the same, but we're really looking for this net income number. So the net income is 110, 110,000 plus. Our dividends, they told us, was 40. And again, we really don't know what the beginning retained earnings was. But we don't really need to know because we just know that this is going to change retained earnings. What is it? 110 minus 40 is 60. So 110 minus 40. Okay. So our retained earnings will go up by 70,000. And again, we don't know what the actual retained earnings were because there could be stock in this beginning equity and, and retained earnings. So We really don't know what it is, but we do know that it changed by 70,000, so change in retained earnings. Oops. It's a tough one. And see. Okay, number 9. Total liabilities decreased by 50,000. Equity increased by 10. Okay, so there we have assets equals all right, so liabilities decreased by 50,000. Stockholders' equity increased by 10,000. So what happened to the assets?
It would decrease by 40,000.
Yeah, because again, we don't know the totals, but we do know that this side decreased by 40,000. So total liabilities, equity went down by 40,000. So you know that this side also has to go down by 40,000. So this must also decrease by 40,000. Hey, right? Yeah, because these two sides have to equal. So if this side goes down by 40,000, then this side is 40,000. And this one down here, dividends appear on a statement of retained earnings statement. And here's an important thing about dividends. Dividends are not an expense. You do not have to pay dividends. And dividends are paid to the owners. It's not, there's nothing given in return. Right. So, so if you make a payment to the, first of all, dividends are not required. A company can say they're having a bad year, not pay dividends. And if you think about expenses, things like rent expense, things like utility expense, gas expense, and whatever, you're paying money out for something. whether it's service like the phone, or if if it's for something tangible like gasoline or whatever it is, you're paying out for something to run the business. Dividends are simply payments to owners. The owners don't give they don't give gasoline back or anything like that. So dividends are not expensive. They do not go on the income statement. They're not required payments, and there isn't anything given in return. Lawyers will tell you it's called consideration, but it's so there's nothing given in return for the money. It is simply a payment to the owners. So it is not part of the income statement. Okay, so that is the multiple choice questions. And then we'll go on to something we haven't seen before. I don't think we've seen before. Let's see if I didn't see it in the first one. Check. No, I did not. All right. So this next one up here, the financial statements. And what we're going to take a look at, now this is obviously, is a little more complex than the first ones we were doing. And there's something that we've introduced here that we don't have to worry about, but I just want to talk about for a moment because we're going to deal with it later on. And that is, to see there's debits and credits here. Now, they don't mean anything for us when we're doing the financial statements. Whether it's a debit or a credit, it doesn't really matter. 1,200 is in cash, and whatever. Down here, accounts payable is 300, and so on and so forth. So you really don't even need to know those to make the financial statements. But this kind of introduces you kind of how we're going to get into recording transactions. And if there are these things called debits and credits, which we'll deal with probably not next class, but the class after. It's simply a way of writing down transactions, but don't worry about the debits and credits as we're going through this, because we are going to we'll deal with that later. So anyway, we're just going to use the numbers from these. So don't worry about the debit and credit part. All right. So let's take a look. Income statement. Income statement is going to have what on it?
The revenues and the expenses.
Yep. Revenues. Here. And again, you guys, you can just write this on a notebook paper if you like. If you don't want to print this thing out, that's fine. Just on here, if you just want to do. $5,400. So forth. You can just write on a notebook paper and take a picture of that. Okay. Now we need cost of goods sold is going to go in here too. 2, 3, 4. Okay, so we have cost of goods sold. And these are all going to be minus. They're going to be negative ones here. So costs and expenses are negative. Okay, and notice that again, we don't really care whether it's debit or credit. Don't worry about that. But we do have to subtract the net income. Okay, so 5,400 minus 16 minus. And I am going to do that one more time just to make sure I didn't move anything. Okay, so this is our income. Okay, statement of retained earnings. Oops. I'll leave it like that. Statement of retained earnings. Well, we start out with our retained earnings. I gotta make these bigger. These, uh, highlight this in case you're wondering what that one was. That's beginning retained earnings. Okay. We add in our net income. Subtract out our dividends. Okay, so 3,000. 16 minus. So this is the owner's piggy bank. So they made 1620, so 1620 went into the piggy bank. They took out 240 out of the piggy bank, so 3,000 plus what they made, what they earned, minus what they took out, and that's what's left over. Okay, let's go to the balance sheet. Now, you'll notice as you go through here, we talk about assets and liabilities and all that kind of stuff. This is the usual order you'll see one of these. This is what they call a trial balance. And you'll notice that this is actually, they kind of group things together. You'll notice that the assets usually come first. We're not going to, this is not going to be on the test, but so here's the assets. These payables are all liabilities. All right. And then down here, this is all equity stuff. And down here at the very bottom, this is the income statement stuff. So, the way that this is kind of laid out is it's sort of laid out in an order that we can use to go, and put stuff in here. So these are all going to be the assets, the cash, assets are anything of value. Cash has a value. Accounts receivable turns into cash, it has a value. Inventory has a value. Land has a value. Equipment has a value. Liabilities are things that you owe. Payables. And then equity are these are the owners. Okay. Oh, so we're going to put these assets in. So we have cash. Okay, so those are all the assets. And again, these are all kind of grouped together right at the top here. And we'll add them up. Total assets are all those together. So 6840. Now we know that this side is going to be equal to the same thing. So when we add up this side, it should come out to this, and if it doesn't, we got a problem. Make sure that I added that correctly. Yep. Okay. So these are the total assets. And now we'll go on to the liabilities. And liabilities, anything that you see that has a, I see the magic word payable. You know, it's liability. So payable, it says payable or unearned liability. We don't have any unearned on here, but so this is people we owe money to. So total liability would be all those together. Okay, equity, common stock. Why did you take these off? Okay, common stock was 600. Make that pink. And the owners still have this money in their piggy bank. This will be the total equity. Uh, 600 plus that, whatever that comes out to. Oh. $1680 plus that. Something wrong. 80 plus 1860. Ah, 1640. Okay. And that is those two together, I guess. So those two. Any question on this? So you're gonna be given one of these in the test. Obviously, it's gonna have different numbers on it, but you have to go through the same way. And if you come down the bottom here and it doesn't balance, you know, start looking for the difference between these two. So for instance, if these two are off by $720, you might look to see something for $720. Oops, can't see. Still can't see. Look for something for $720. I should pick a different one. Suppose it's off by 480. There we go. Look for something that has a value of 480. So if you get down here and they don't equal, subtract one from the other and see what the total amount is, then start looking for maybe where something got left off. But it is sort of like a check here to make sure that these two are the same. I'll tell you the biggest one that gets missed is you cannot hear retained earnings. People put in the 3,000 instead of the ending number. So it's going to be the ending retained earnings, not the beginning. But this is probably the biggest one that gets missed is the retained earnings. People put in that number, which is not the ending. We want the ending amount, which is that. Any questions? Okay, so just to kind of show, I'll tell you what, I'll show you guys right now how we put this stuff in. Okay, so here on the blackboard, they give this as a standard, blackboard sheet. I wish they made these a little easier to read. These are so faint. It's light green and it turns the light purple when you're over it. But anyway, so submit work here. So this is how we're going to do it. So I'll put the assignment in right now. You'll see how we do this. So assignment name will be those. First thing will be is Chapter 1 handout. Due date is due date is a week from today, so we'll say February 2nd. Points possible 100. Submission details, unlimited attempts, highest grade. So a limited amount of time, a limited amount you put in there. And that's it. I gotta do something here. I come here to say submit. And so, something happened here. All right, so there's a chapter 1 handout, and then just going through here, I'll just it'll be the same thing. Chapter 2, no, sorry. Chapter 1, practice exam. Due date. Points. And lastly, oops. So here's where you're going to submit stuff. So you're going to submit all coursework here. There's for the handout. There's for the practice exam. There's for the exam. you can write those out in the handout on the practice exam or in notebook paper. You can take pictures of it. However you turn it in is fine with me. It may be one file, it may be 10 files. You notice that it says unlimited amount, so any way you want to turn those in. They're due next Tuesday, and you won't have a grade to date until next Tuesday. And stop, what are you doing? I'm getting a pop-up, so I can't get my oops. Any questions on that? I'll send out the exam will be I'll send out a little bit later. I think I'm going to try to do the exam so that you can actually fill in the blank in the sheet itself, which will hopefully make it easier to submit it. You know, that you can actually fill in the blank in the table for the exam. So anyway, give me a minute or two. You give me a little bit of time to put that together. But so, and then whenever you turn in, and again, you can turn it any way you want. If you want to do it in, you want to print it out and do it that way. If you want to type right into the document, if you want to do it in notebook paper, I'll take any form of it that you want to turn in. Any questions?